All right, what is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about the bond market. We got to talk about some stocks. This right here, I think, is the most important chart you guys want to pay attention to right now. It's either going to be a really big tailwind for a lot of stocks and potentially even bonds, or this is a fake out and we could be end up seeing a larger move down. Okay, we'll explain why this chart is so important. We're going to go over TLT. It has a very impressive basically the past trading week has been very impressive, up over 100% on the call options in the Discord on TLT, talking about the different signals that we're looking for. We'll break those down. We'll also go over the 20 simple moving average on TLT and why I think that this is important and what this could potentially lead to. And then we'll take a look at yield, right? Specifically the 10-year treasury yield. We'll go over what my structure is for the 10-year yield. And it's basically been the same structure for over a year. And if you've been a long-time fan of the channel, it seems that we're starting to get a lot of these structures playing out. So I'm pretty excited. All right, we'll go back to this dollar and 10 treasury yield chart. All right, take a look at some charts from All-Star Charts, breaking those down, as well as the relationship with utilities, which have had my attention for a little while. Okay, if you've been in the Discord, we've been posting about utilities for close to a month, and it's just been absolutely ripping. I mean, if you look at this massive move in utilities, been really strong. We'll take a look at some ratio charts here, and then take a look at XLU versus TLT and what I think that potentially could mean for TLT. And then we'll look at some interesting stats and data via seasonality and historical data for the stock market and where potentially we are right now and where that could lead us towards the end of the year, given all of the different data indicator thrusts and different things we have going for us in the stock market today. We'll also take a look at Domino's Pizza, one of the strongest stocks, literally outperforming Google. This is insane to me. So this is something I definitely wanted to bring to you guys' attention. But as always, the content provided on this channel is for informational and educational purposes only. It's not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance and trading content, trying to spot what I see shifting in the market. And you're going to want to sign up for that, okay? Because we're talking about some utilities in today's video. I'm putting out 3 utility stocks in the newsletter for you guys. And that should drop sometime soon this week, probably on Wednesday. Okay, I'm going to try to get scheduled posts on the newsletter of Wednesday and Sunday. There's a website associated with it. So if you don't want it coming to your inbox, you can just look at the website. But if you review the website and see some of the previous articles that you guys like, well, then it's something you want sent to your inbox, then you can sign up for that. Now, you can also get into the Discord right now for just $1 using promo code May24, okay? Promo code MAY24 will get you into the Discord for just $1. We're doing a big upgrade. And in June, we're going to officially, launch and, have hopefully all of the upgrades done to the Discord. So while we're going through that process, I'm letting people join for just $1. Okay. That's where you get access to all my research, a lot of the data, more data than I post in the videos, as well as other valuable resources, custom scripts, indicators, and many, many more things. Now, the reason that this chart right here is so important to me is because we have the dollar on the top and yields on the bottom. These two things impact equity markets and other markets very much, okay? And what I mean by that is, the dollar is going to impact things like gold and your metals, right? So if this is breaking down, that could be a tailwind. That could be something to potentially help gold continue its rally and maybe make that next leg higher if the dollar continues to climb down lower and reverse over here. Same thing with yields. Yields often have a negative connotation associated with tech stocks, right? And things like that. So, I'm really watching these, right? There's also interest rate sensitive stocks, right? Today, if you actually look, we saw a lot of interest rate sensitive stock sectors leading the market, right? We saw utilities, one of the market leaders today. We saw XLRE, the real estate sector, interest rate sensitive, right? We're seeing lots of interest rate sensitive sectors in the market, really starting to catch a bid here. And I think that this is going to be something you want to monitor and continue to see how it develops. Now, when we look at the daily time frame for TLT, there's a few things that we're looking at here, okay? If you're new to the channel, one of my favorite chart patterns is known as the inverse bump and run pattern. So that's what happens when you have a prevailing downtrend, and then you get this aggressive bump down in price, right? You see we're pretty much trading you know, in this downtrend, and then we all of a sudden get really aggressive with the downtrend here, and we bump down. The run of an inverse bump and run is when you break through the first trend line, you break through the second trend line. In a perfect world scenario, it's going to take you back up here to where the pattern began, right around $98 to $100. Now, we don't live in a perfect world, so this doesn't always work out. Sometimes it does get rejected at the second trend line, but this is a pattern that's, for me, pretty easy to identify, and it oftentimes offers some really explosive moves to the upside. And that's exactly what we saw. Now, in the Discord, we were talking about many different signals, and on the YouTube channel, I broke down some of the previous signals. You know, one of them was this shelf that we had on the RSI, basically saying as soon as we break through this shelf, and you know, we're most likely going to see a large move to the downside, right? And that's what we did, right? We broke through the shelf over here back when we were trading around 91, and we dropped all the way down right around 87.50. Okay, so pretty significant move in a short amount of time, and we did really good on shorts for TLT, right? Over 300% on some of those put options. You know, if you're following the analysis, right? And depending on what type of option contracts and risk tolerance you guys have. And then we're looking for potential signs that this is going to reverse. Now, remember 89.50, okay? I pointed out that this level was extremely important and that the bulls really needed to cross above there. The reason being is because that is your 618 Fibonacci retracement level. And below that level, the odds greatly increase of a 100% retracement, taking us all the way back down towards the 82.50 area. That's not what we wanted to see. What we did end up wanting to see was this inverse bump and run breakout, get back above 89.50, and we actually formed a really nice base here. And so what I was mentioning to people to look out for as some of the buy signals is, hey, look at how strong this shelf was as support on the RSI. Okay, if we can reclaim that area and have a little bit of scoop and score, right? So we scoop underneath this level and then we score on the breakout, which is exactly what we're getting right now, what we've gotten. That's going to be a good signal. That's going to be a buy signal for TLT, along with a MACD crossover. Now, we highlighted it whenever it was curling, right? Once we start to see it curl, now we're looking for the RSI to reclaim this level. We're looking for this trend line here to break. We're looking to reclaim 89.50, and we're looking for the MACD to curl. We got all of those signals. It's been a great time, and, you know, it being long TLT. And now, you know, due to the call option expiration that I had in, you know, TLT, pretty much closed that position today and going to be looking for some new entries, right? I mean, if you come up here and take a look, it makes sense. We saw a little bit of resistance here, right? We had old support for resistance. We hit that level again. We're pulling back. But I want to see, can we stay above 89.50? All right, so above 89.50 for me, I think you can target longs. We are going to have some resistance here around 92.20, but if we can break through there and break through our trend line, 93.72 is your next target. And then above there, there's many gaps to fill, right? We've got a gap up here to fill, and then we're targeting that $98 to $100 area on TLT. So I'm really liking how things are shaping up right now, and it's looking pretty good. Now, to keep things really simple, right? And take all of these charts out of here, take all of these extra drawings. Let's just use a 20 simple moving average. This is a pretty good trend indicator, okay? And you see multiple failed rallies over here, multiple failed rallies, multiple failed rallies. We're closing above now this 20 simple moving average again. And so the big question is this another failed rally that's going to result in us plunging lower? Or could this be the start of a nice uptrend like we saw over here? This is what I'm thinking is a possible scenario. Now look at how choppy and ugly this is, okay? We go from 86, we come up to like 90, then we drop back down to 87, then we come back up to 90, and then we drop back down to 88. And, you know, it may be difficult, it may be tough, but I do think that if you want to use this 20 simple moving average as a trailing stop loss, it's not a terrible idea, okay? Now, if you want to be a little bit more patient and wait for this to start to curl to the upside, because this is still in a downtrend, so the primary trend that we've been in is still a downtrend, okay? But if this can start to curl to the upside, as you see here, now we start to curl to the upside, right? So it's in that downtrend, we gap up above it, it's flatlining, and now it's curling up. If we can get that 20 period moving average on the daily time frame, the 20 daily moving average, to start curling up, I think that's going to be a good signal for TLT and a potential signal to stay in longs on TLT. Now, when you look at yields, remember, treasury yields move the exact opposite of bonds, okay? That's just how they work, right? And so I'm going to do a little bit more of a macro video in the future here shortly. But if we stick to our daily time frame, we came up right around where we thought our wave 3 targets were going to come, which was 5% on the 10-year treasury yield. At which point we're expecting a correction for wave 4. Okay. Now, a corrective wave in Elliott wave oftentimes comes in the form of an ABC. So we've got an A wave down, we've got a B wave up, and your wave C is typically the 1.0 extension of your wave A to B. Well, your wave C extension right here is going to put treasury yield, the 10-year yield, right around 3.5, which is an area that you hear a lot of people talking about, especially people that are really dovish and think that the Fed is going to cut rates, or people that think that yields are going to go lower ultimately, right? It's been that 3.5, essentially the 3.75 area, which you can see was our last floor that we had for that wave A. So this could result in an ABC and a flat that comes back down towards that same area. But, in one of those perfect world scenarios, you would actually expect the 10-year yield to come back down to 3.5. If this is the top of wave 3 and we're in wave 4, this is a very likely target area. We're at 4.46 right now. Okay, so that's a long way down, and that's going to be a very big boost to TLT. Think about where TLT was in the beginning of the year. All right, if we look in the beginning of the year, right before yields bottomed out, you can see TLT was trading above $100. We're still at 90 right now. So that's over a 10% move to the upside. And if we were to take a look here, if we were to break through where that level was down there, that would put TLT above 100, right? Closer to 105, maybe even 110, somewhere around those areas. So, I'm going to be watching closely, right? We've been seeing a lot of really good analysis and technical analysis on the yields and on bonds, and it's just following the script very well. Bonds have been one of my favorite things to trade because of how well they follow the technicals, and really, really nice and impressive stuff to see. So I'm going to be watching these very closely, watching these yields. Okay. Now, again, this is that same chart. Okay. Just suggesting, hey, yields look like they're topping out and they're going to start a downtrend, right? The dollar looks like it's topping out and about to start a downtrend. That can be bullish, not only for bonds, but also for stocks, right? We've got a bear flag, maybe potentially right here, on the 10-year yield with a bearish divergence on the RSI, right? Some really good signs. Now, XLU and TLT, so utilities, are one of those interest rate sensitive sectors of the market. And if you take a look, they have a very close relationship to bonds, right? Specifically TLT in this example. And so a lot of people are making the bet that TLT is going to catch up to utilities, right? Because that's the big question right now. People want to know is which one of these is right? One of them is lying. Are utilities lying? And are they going to close this divergence and start dropping hard? Or has TLT been lagging? And is TLT about to try to catch up to utilities? So this is another thing that kind of has me a little bit bullish on TLT, and something I'm paying attention to closely. Now, utilities, we've been watching these in the Discord pretty, over the past 3 weeks, 4 weeks even, and I'm liking a lot of things that I'm seeing here at the moment. So, we had a topping pattern over here, back last year in 2023, and utilities really started to underperform the stock market. Okay, now that's bullish. All right, don't get me wrong. This is a ratio chart of XLU divided by SPY. So as this is going down, it means that utilities are underperforming the S&P 500. Right? Typically in a bull market environment, in bullish market environments, you don't want a defensive sector such as utilities really leading the way. Okay. But what do I see here, right? Well, I see, hey, it looks like we're putting in a bottom right here. We're trying to reclaim back above a previous zone of support over here. If we can break out above here, it looks like utilities could continue to outperform the market. Okay. Now we finished a lot of the big tech earnings, but there still are plenty of tech stock earnings. And if these tech stock earnings don't come in at what investors and what the market wants, you're going to see really big drops, right? We just saw a pretty sharp drop in Palantir. All right. That one dropped, 8-10% overnight on earnings. And if we continue to see stuff like that happening with utilities catching a bid, then it's very possible this ratio chart is telling us, in being a leading indicator, that utilities are going to continue to outperform the market. Okay. Now, remember what I said about the dollar falling, yield falling could be bullish for markets. Okay. utility is outperforming the market for a certain or small time period doesn't have to mean that the rest of the market has to crash, but it can potentially give you context clues, as I mentioned, into, okay, hey, maybe we're rallying and this is a little bit more of a defensive rally versus offensive rally. Okay, so keep that in mind. This is that XLU TLT chart. And again, just kind of highlighting, hey, TLT really hasn't broken out, right? You see it's still in a downtrend. XLU broke out of its downtrend. So if these two, which move very similarly, which is pretty evident on this chart here, if these two, which move very similarly, is this a signal that bonds and TLT could really start to rally here? Or is this a little bit more of a blow off top and this is about to start to reverse? That's one thing I'm going to be watching. Now, the S&P 500, this is from Ryan Dietrich. Great stuff right here over at Carson. I highly recommend looking at their research. But basically, he's saying that the S&P was up around 7.5% year to date. Only 4 times going back 70 plus years did it gain between 8 and 10%. So the odds of it staying here are very slim, and the odds favor either much higher or much lower from here. So what do you guys think it'll be? Me personally, I think that we're going to have a bullish year and we're going to end the year higher. Double-digit gains in the stock market. Now, there's a few reasons. We're not going to get too hypothetical here, and we're just going to do historical data analysis and seasonality. Okay, so if you look at the seasonal path for presidential election years, you've got every other year in gray here. You've got the presidential election in first year here in red, and then we've got the election week here in yellow. Okay, and what do we see here? Right, and this is essentially where we are right now. We're kind of in this period here, and you can see that it's very normal for and during these presidential election and first years for us to continue dipping, right? Continue dipping some more, and then we have a very strong rally, right, into the end of the year. This is the end of the year right here. Okay, we have a very strong rally into the end of the year, which is a scenario that I think is going to happen again. Now, this is another version, another chart of seasonality. This one is from Almanac Trader. Okay, and you see big election year Q1s dip April through May before big gains the last 7 months. And what they mean by big election year Q1s is if you take a look at the green line on this chart, these are all of the top Q1 election years, right? So all of the first quarter election years that really performed, right? That had massive outperformance in the top performance in the first quarter of the year. This is the seasonality chart for them. And then you have the rest of all the election years here as well. So you can see, just in general, all the election years are typically bullish, right? We're not going to get too political, but imagine you're trying to run for president again, right? Run for re-election. You know, does a bullish stock market or a bearish stock market, which one has a better impact in, you know, the possibility of you getting reelected again, for instance, right? I mean, most likely a bullish stock market. So, you know, just take that with a grain of salt, but, you know, something else to consider here. And we're here in this period now in May where it's kind of ugly, okay? And we see that historically in the top first quarter election years, it gets ugly through, you know, May and heading into June. And then what do we see? Oh, we see a nice rally into those last 7 months. If you look at the seasonal pattern on this one for 1968, 2012, and then now we have 2024 in purple here, we're following very, very closely to the 2012. I mean, look at how similarly we're trading to 2012 right now. And, you know, boom, what do? Again, we kind of bottom out here around that June timeframe, and then we rally into the end of the year. Now, that's seasonality. What are some other things suggesting that we are going to continue heading higher for the year? Well, we have the RenMac thrust indicator, okay? And this is the percentage of issues making 20-day highs, hitting new all-time highs here earlier this year. And it's a bullish signal, right? It's more of a longer-term bullish signal. And it's something, again, that kind of just backs up a bullish finish to the year. Now, Sam Gatlin is tweeting here from All Star Charts, basically that the SPX PPO just got a bullish crossover at the same time that it regained the anchored volume weighted average price, the anchored VWAP, which is anchored to the all-time high, right? This is something I pointed out in my last video I put on the SPY and on the S&P 500 is, hey, we're dancing between the year-to-date anchored VWAP and the all-time high anchored VWAP. Price action is going to squeeze between here, and you want to see which way it breaks out, right? Is it going to break out above or below those anchored VWAPs? We'll get into that a little bit more when we go into our SPY chart. Now, Investors are out here saying AI is the next big thing. We need to invest in it heavily to capture growth. Domino's says, hold my pineapples, Google. Hold my pineapples, Microsoft. And if you take a look here, if you look at IPO comparison, okay, Domino's Pizza versus Google, Domino's has outperformed Google. And this just goes to show that, food stocks, restaurant stocks, they are some of the most slept on stocks in my opinion. Okay. And it always doesn't matter about quality. It's not about what place has the best tasting food. It's which restaurants have the best business, right? And which ones have the best business models. Look at Darden restaurants. Okay. A lot of the Darden restaurants, things like Olive Garden, Longhorn, they're not 5-star restaurants, but they run their business models very well versus something like Red Lobster right now, which I believe is declaring bankruptcy. Okay. Because they're trying to get people in the door with this endless shrimp. And this endless shrimp has got them losing endless profits, right? And now they're in endless debt. So yeah. Now, that's pretty much going to wrap up today's video. Okay, we mostly covered the bonds. Sign up for the newsletter. There's a link in the description for that. I'm going to be dropping 3 utility stock charts that I want you guys to pay attention to on the next edition of the newsletter. Those are going to be coming out. I'm trying to schedule those on Wednesdays and Sundays now is when you can look forward to those. Okay. Stay tuned to the channel for my next video that's going to cover the S&P 500 and a couple other sectors in there as well. And if you enjoyed the analysis in today's video and you ever want to do a one-on-one session with me, there's a link in the description for my Ko-Fi page. Using that Ko-Fi page, you can directly book a 30-minute or 1-hour session. You just simply click on the commissions tab. You can request a specific video for the YouTube channel you guys want me to upload, and then there's also a little buy a coffee button in here. Basically a way to leave a tip or donation for the free valuable content I put out, such as the newsletter, such as the YouTube videos, and if you want to join the Discord, okay, before the price goes up in June, and while things are, kind of getting worked out and rearranged inside of the Discord, promo code May24, that's all caps. That'll get you in the Discord for just $1. And then after that, you have to pay the regular monthly fee, okay? But your first month will basically be $1, so almost getting you guys in there for free. So appreciate you watching, subscribe to the channel, and I'll see you in the next video.